Oracle has expanded their Nashville offices to support what they call rapid growth, up to 2,000 employees. Starbucks just announced a lease, 2,000 people. This is major. People are voting with their feet. And we're seeing this with pretty much every metric, whether it's storage vans or U-Haul or census data or IRS wealth migration data. Tennessee is a massive winner. So why is it that the real estate market is so soft in Nashville? Well, in this video, we're going to look at some key metrics along with some anecdotes that I'm hearing to help explain what is happening and why we may have a very soft 2026 in spite of job growth opportunity. It's important to realize that the labor force in Nashville has been growing. And along with that, the employment has been growing every single month. We continue to see growth in employment. I debated someone several months ago about this. They suggested that the labor force was rolling over. I know that there's probably going to be layoffs with AI. But the truth is that Tennessee continues. It just doesn't matter what metric you use. We continue to win with people looking for great places to be. Why then is the real estate market so soft? Well, let's take a look at what's happening in Nashville. And I want to overlay this with some job uncertainty, because I know some of you are probably saying, well, didn't Oracle just have this massive layoff? I've talked to several people about this. Here's what I think is going on. Yes, there were some Oracle Nashville jobs that were lost. Anytime you have a massive cut in jobs, there's always jobs lost everywhere. So if they cut 5% of their SG&A, then you might expect that 5% of their 800 get cut. Maybe there's 40 or 50 that get cut here in Nashville. But that doesn't mean that they're not continuing to expand. It means that they're reorganizing. Their footprint might drop a little bit, and then it might increase even more. And I think that's what's going on. So why is it that the real estate market is so soft in Nashville? I'm going to do a Nashville real estate update here. And Graham Bauer, he's asked me to do Crieve Hall and Caldwell Hall neighborhood. So I'm actually going to drill into those. I'm going to show you some ways, if you're a buyer or seller, that you can actually time the market. Believe it or not, people are like, oh, you can't time the market. True and false, right? I have no idea where prices are going to go in the future, but I can tell you where you have the most leverage and when you have the most leverage and things you can look for to get that leverage, whether you're a buyer or a seller. We're going to take a look at that in the Crieve Hall market toward the end of this video. So stay tuned for that. But let's take a look at Nashville's market just in general, okay? Active listings. Active listings are up 11%. This is really, really important, and I'll tell you why. The growth really started bending up in March. What we see is this gap of 10 to 13% is continuing to grow at the same pace. This gap is no longer narrowing. Keep in mind, from June of last year to January of this year, there was an active listing growth gap that was shrinking, and we were on pace to actually have fewer active listings this year than last year. Guess what? That has stabilized, and now we are on trajectory, if we continue this trajectory, to have over 10,000 active listings at the end of June. Do I think we'll hit 10,000 active listings? I'm a little suspicious because I think people do react as the growth starts and as the softness increase. And I do believe that with this current contract volume, an active listings over about an 8,500 or 9,000 creates a really, really soft environment for sellers. Okay. Now, what's interesting about this, if we look at the neighborhood tracker, we're going to come back to this chart in just a second, but let me show you the neighborhood tracker here. If we zoom out, okay, the middle, this is Davidson County in the middle, okay? This is urban Nashville. We're going to talk about Davidson County. We're going to talk about Wilson County, which is just east of Nashville. This is your Mount Juliet and Lebanon. And then we're going to go down south to Franklin, Williamson County. That's just south. This is one of the wealthiest counties in the nation, just south of Nashville. There's some dynamic shifts in all three of these. If you're paying attention, it's pretty surprising. Let's talk with Davidson County. Okay, when we look at Davidson County, the most urban county, what we're seeing is an interesting outperformance. Keep in mind, active listings are up 11%, but they're only up 2% in Davidson County. That's interesting. it's tighter in Davidson compared to the other areas that are growing. Let's look at contract volume. Contract volume for Davidson is up 4%. So we have more contract growth in Davidson and we have less active listing growth in Davidson. Believe it or not, it actually feels busier in Davidson County right now than it did last year. Now let's compare that to another area that is busier but feels a lot slower, okay? And that's Wilson County. Wilson County, if we go east of Davidson, Wilson active listings are up 37%. There is a ton of new builds putting massive pressure on prices. We just had a buyer. Seller finally gave up, listed it for $760, bought it in 2023 for $690. My buyer eventually got it for 5% less than he purchased it for 2 years ago. Why? Because they're up 37%. New builds are putting pressure on prices here. You have a lot more ability to negotiate, even as contracts are up 9%. Contracts are up. There's more demand, but active listings are up so much more you would barely notice the contracts are up. Now, let's contrast that with one more, Williamson County. Remember, that's south. Active listings up 7%. Contract volume, though, it's down 9%. I believe that Williamson County is very soft, with contract volume basically flat to down from the previous years. And it really responds, in my opinion, to the stock market. If you look, March 24th, we really saw a slowdown in purchasing in Williamson County. Kind of coincides with more of the asset-heavy buyers that have balance sheets as opposed to income-heavy buyers that are more interested in mortgage rates. I think we're seeing a slowdown in Williamson because of that. Now let's look at price cuts as a percentage of active listings. This gauges the number of price cuts as a percentage of the total number of active listings. If it's up, there's a ton more price cuts if active listings are up. And believe it or not, it's up relative to last year. At the same time, we have a lot of relistings, lower prices. It's much different market environment right now in Nashville. And by the summer, really by the end of May, you could see some significant softening if this growth continues. So let's keep an eye on it. Let's see what happens to price cuts. That's a indicator of motivation. AI is absolutely changing my website. I've been able to add all the neighborhoods. You can see I now have all 9 counties in Middle Tennessee. Anywhere there wasn't a neighborhood, I'm using census block groups. You can change. There's now overlays, active to contract ratio. We can do the competitiveness score, which is what I was using, demand, inventory, year-over-year change, gross yield. It is lighting my site on fire. This is the best residential real estate tool that's ever existed, certainly for Nashville, certainly for residential home buyers. I'm able to do it because of how crazy Claude is. I'm able to do this. I built a CRM over the last week. It reads contracts. It sends automated emails. It sends notifications to buyers to help them keep track of their purchase. I mean, I'm just telling you, it's insane. Now, corporations are going to catch up on that over the next 12 to 24 months. And I do believe that there are a lot of uncertainty about jobs in corporations, and rightfully so. But there's so much more opportunity for entrepreneurs. That's just a PSA, by the way. That's completely unrelated to this video. I'm having a blast. Ethan, would love to know your thoughts on Crieve Hall and Caldwell Abbey neighborhoods in a video. All right, Graham, let's take a look. All right, so I'm going to come down here. This is just south of you got the zoo right here. But let's take a look at Crieve Hall. And this is going to help you, if you're a buyer or a seller, understand what timing looks like. Okay. Now, what do I mean by timing? How do you time it, Ethan? What do you look for when you're quote unquote timing? And why does that make the fall such a better time to buy? Well, the first thing we look at is motivation. This is essentially right here a motivation score. And what it is it's just the number of price cuts in that neighborhood. Whenever it spikes, that's a good time to buy. August of 24, it spiked. The late summer, October of 25, it spiked. If I'm buying and I want to buy in this neighborhood, I'm looking for increased motivation. Now, overlay that with 2 other lines. Active listings, that's the blue line, and contract volume, that's the red line. Whenever you see active listings spike and you see contract volume drop, that's also a good time to buy. Look at this. Active listing spike, contract volume drops, price cuts increase. This window right here of August through September was actually a pretty good time to buy in Crieve Hall. Now, that doesn't mean that prices are going down or up. It just means you have more leverage with sellers and you can offer more aggressively and you can get a better deal than what most people are getting in this neighborhood if you're using data like this. Now, what do we see today? Today, we see active listings spiking. We also see contract volume spiking. Okay, so contract volume is 7, active listings are 19. If we go back to April, early April of last year, what do we see? Last year, we saw fewer active listings, but we saw much more contracts, 12 under contract. Even though it looks like it's spiking, it's actually slowed down a little bit. Something to pay attention to. What am I waiting for if I'm a buyer? I'm waiting for these active listings to pop. I'm waiting for contract volume to drop and ultimately waiting for those price cuts to increase, showing sellers are ready to move it. Then I'm going to jump. If I'm a seller, what am I looking for? I'm looking for more of this ratio right here, April of 25, where you had 12 under contract and you had 13 active listings. It feels like a 1 month supply, very, very hot. We see a drop in active listings, an increase in contracts. That's a great way to, that's the time to list your property. And what do you see? You see price cuts had dropped. That was a hot time in the neighborhood. Let's just take a look at a size category. Let's just look at the largest on here. I am going to take these diamonds are off markets. They're going to show you what happened wholesale in this neighborhood. For now, I'm going to take those off markets off and we're just going to look at this neighborhood. Now, interestingly enough, when we look at this neighborhood, we see an active listing lower than what the trend is for the past really 18 months. What gives? What's going on there? Well, I'm looking at the street. It's Harding. If I were to highlight that, I can see the lowest active listings are actually on Harding. You see on the neighborhood over here. That tells me that they're actually really bad locations. You don't want to be in Harding place. You're going to have to lower your price if you're going to sell right on Harding. That's not necessarily an indication of prices dropping, especially because we can see the higher, more expensive houses are listed for higher. Sellers are still feeling confident here, even though I think it is softer than last year. If I'm a buyer, I'm trying to be patient. I'm gonna put a 3 to 6 month timeline, and I'm gonna wait for those spreads between contract volume and active listings to maybe spread a little bit. Do I think prices are going down? Let's take a look at attached. I think attached is probably going to be a completely different story. Let's just take a look at the attached in this neighborhood, and what do we see? Yeah, attached has been dropping. If we look at the smallest attached, these are going to be condos, and you can see in these condos, they're right on Harding Place. Look at the price. The prices have been just absolutely tanking, with one going for $85 a foot, $75,000 for a condo. When we look at discounts in this and we look at just site built, what we can see is, look at that one. That one dropped 15%. 610 Farrell Parkway. Where is that? That dropped. Let's take a look at this listing. This is going to be one of the most expensive sales in the neighborhood. There it is. Let's look at 610. It was listed for $125, $200,000 off this house, $190,000 off. It was listed for 100 days. They finally gave up and they sold it for almost $200,000 less than listed. That's the kind of thing I'm seeing. So if you are a buyer, sellers have just so much more competition. They're starting to get more realistic. And believe it or not, agents are really pushing sellers to either be honest about where their house is worth. Believe it or not, if prices drop in Nashville, you should be thanking list agents who are pushing their sellers to be honest about where the price is. And look here, $200,000 less. Obviously, I don't know the story on this one, but I mean, you can literally see, you go down here, you can see where the biggest discount to list price is, and you can study those in neighborhoods by specific side. I mean, it's just a powerful, powerful app, and I'm continuing to improve it. You can get a better than average value if you use data and strategy and patience. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks for watching.